Okay, hi everybody. Welcome to today's event. I'm Jason Gumper from MSDynamicsWorld.com here to welcome you to a session all about getting started with automating accounts payable. Our presenters today are Anna Tuunen of DoApp and Bob Cohen of Ardent Partners. And as we get started, I just want to take care of a quick bit of housekeeping. We do welcome your questions during today's event, and I know that Anna and Bob will be leaving time at the end for those. Please look for the Q&A block you should see to the right of the main presentation window. That Q&A block enables you to enter questions at any point throughout the session, and we can hold on to those. If you don't see that, just look in the upper right for a Q&A, for a question mark icon. That'll open that up for you. Without any further delay, I'm going to hand things off to Anna to get us started.
Thank you, Jason. Welcome to our webinar hosted by DoApp, the accounts payable solution built ground up for Dynamics 365 for finance and operations. And on today's agenda, we have a look at the state of e-payables now and what does the researchers say the best-in-class companies are doing to achieve the cost savings and the efficiency that they have. After that, I will give you tips and tricks on how to get started with the invoice automation, regardless of what AP solution you're currently using, if any. Whether it's standard AX or AX plus a third-party solution, there is a lot of automation that you can achieve by simply making changes to your process. My name is Anna Tuunen, and I'm the product lead of DoApp. And DoApp is an accounts payable software designed to integrate with AX and D365 as a turnkey solution. My background is in IT and accounts payable as a controller, and I used to be an AX finance consultant specializing in the AP process. And I have a lot of experience on different solutions that integrate with AX. I've been building DoApp from the start, and I try to sync all my experience with best practices in designing it. And all of the smart people I've met throughout the years working in this domain. So speaking of which, joining me today, providing our kind of a keynote about the state of e-payables is Bob Cohen, Research Director of Ardent Partners. And Bob will be providing the facts and figures to back up the theories I present later. So without further ado, I will turn over to you, Bob.
Please provide some information in this webinar highlighting our most recent AP-themed report from Ardent Partners called the 2017 State of E-Payables, the Convergence of Cash, Suppliers, and Intelligence. Let's move to the next slide, and just a little about me and my qualifications. I've spent the last 15 years in the procure-to-pay space. I've presented at numerous conferences, webinars, trade shows, blogs, articles, etc. I've been spending the last 15 years helping enterprise transform their source-to-pay operations, which includes accounts payable, which includes invoicing, to help them go from the manual labor-based processes to one that's much more transformational, automated, and operationally effective. I'm also the publisher of Payables Place, the site for AP technology news and research, and I'll talk about that in a little bit. As I mentioned, I get most of my information dealing with end-user customers like yourselves on the line, finding out what they're doing today, helping them implement new systems. So I'm really pleased to be here. Let's move to the next slide. Payables Place, if you're not familiar with it, it's definitely worth taking a look at. It's a site exclusively focused on the electronic payables market. It provides easy access to research, to news, to briefings on technology providers that we've been talking to. It provides tech updates on what's going on in the industry, as well as subject matter expertise. We've got a huge community of AP leaders and practitioners there, so if you're not signed up for it, I highly encourage you to do so. The next slide, a little about Ardent Partners. Some of you may be familiar with us, others less so. We're a research and advisory firm that's focused on defining and advancing supply management strategies, process, and technology that drive business value and accelerate organizational transformation. I mean, in short, we help business decision makers understand industry best practices and the technology landscape and then apply them to your businesses, short and simple. And we do that through providing research, subject matter expertise, content, analysis, etc. So let's take a look at the State of ePayables report. We're going to take a look at the continued evolution of the accounts payable function. We're going to start off looking at the top priorities for AP leaders today, and then discuss how AP can serve as a convergence point for cash, supplier, and data management. You know, if you don't know where you are, any road will take you there. We've all heard that before. So it's important to understand, you know, with AP, if you're completely manual or if you've automated some parts of your operation, you need to understand today what you're doing, what it costs you to process an invoice, how long it takes to process the invoice, what kind of data you're getting from that. Understand where you are today. You may be at the beginning of the spectrum, maybe in the middle, you may be at the end. If you are, great. There's always room for improvement, but you need to understand the benchmark, draw a line in the sand so that as you begin to implement some of the technologies that we talk about today, you can show improvement to your bosses and their boss. Say, here's the impact that AP is having on the organization. So the report itself, some of the demographics used to explain the report and where we gather our data from. We had over 191 respondents from various companies throughout the world responding to this. It was a very senior level response with 50% coming from director level of hire. The majority of the respondents worked in AP, as you'd expect. The data was primarily tilted towards North American and, to a lesser extent, EMEA, European responses. And what's also good about the data is it came from over 25 different industries, so we have a good cross-section. We're not focused too much on services or manufacturing. It's all a blended mix. So the results provide a good across-the-board understanding of what's going on. So quickly on the research process that we have here, you know, we follow a rigorous research process that's been developed over years and years spent researching the supply management of which ePayables is part of, supply management space, which ePayables is part of. The report is part of an ongoing dialogue that Ardent Partners analysts have had with AP and finance leaders for more than a decade. The report examines general competencies and capabilities of accounts payable organizations today and highlights the management strategies and tactics that AP leaders use to get the most from their team. The primary research effort was also informed by the experience and analysis of the report authors and the entire Ardent Partner team. So what we do is there's one person that owns the report, but the rest of the team members contribute to it because we all have experience in the ePayable space, and we use that to provide our commentary on the results and provide some information and insight into what's going to happen going forward. You know, so one of the key takeaways from this is, you know, Ardent has a deliberate process to its research, and the report results are statistically and strategically meaningful. So let's get into it. So in 2017, there are typically three pressures that are felt across all functions: shareholders and executive teams. These three are globalization, an uptick in the general speed of business, and increased competition. The opportunities for success in a globalized marketplace are greater than ever before, but are generally only available to those enterprises that have the necessary strategy, resources, and expertise to execute well and with precision. How does AP fit into all of this? Simple. The starting point for a new era of accounts payable begins with a common concern for this unit: perception. The top-performing AP groups are making a difference, and a number of those teams that receive recognition as a source of value continues to grow. 50% of organizations perceive their AP functions as either very or exceptionally valuable to the organization. This number is notably higher than in recent years and shows that AP is well-positioned for greater things. I've seen this way too often throughout my career where AP is kind of billed as just paying bills, and if that's your perception, you need to change that, because that's the perception that your manager is going to have and their managers. You need to show the strategic value of AP, and this is what it talks to. You need to position AP as the confluence of where all the money within the organization gets spent and provide analysis into that. So let's move to the next slide there. So as far as technology adoption, one of the biggest takeaways from the figure in our technology adoption chart is that a fully automated AP operation is less commonplace than it should be. So if you're out there saying, hey, we're completely manual, we're so far behind, you know, unfortunately or fortunately, you're not that far behind. The existence of a fully automated AP department is not that commonplace. So if you're just starting or you've done a little bit, you're on the right road. So you have a chance to impact the future within your organization. We took a look at some of the different areas of solutions that were there, and automated data capture and extraction technology was 51% of the respondents said that they had this solution in place, and that's not surprising. It's one of the most traditional components of a successful AP automation function. For even smaller organizations, this type of automation is a boon to transfer the key segments of information from the paper-based invoices into on-demand data, which is then fed into a larger financial suite, i.e. the P2P platform or the full automation suite. Also, we're seeing an increase in electronic payments. Here in North America, we still love our paper, we still love our checks, so the fact that we're approaching 50% of electronic payments is significant. I think this number is something that will only increase as we go forward. So if we take a look at, on the next slide, the percentage of manual versus electronic invoices, AP departments continue to face time, cost, and effectiveness challenges. Our research shows that the average enterprise received 56% of its invoices in a manual format, which include paper, PDF, email, or fax, with the remaining 44% being received in electronic format, which includes electronic invoice, PO Flip, EDI, XML, or web portal. So if AP's top priority is to reduce invoice processing costs, the overall percentage of all invoices that are received in a manual format is way too high. AP departments would be wise to put in place mechanisms that can convert manual invoices into an electronic format so that the data can be captured and processed in a more efficient manner. We all know that paper is inefficient. This slide and results point directly to that. So you need to figure out ways, how do we eliminate the paper as much as possible so that we can deal with straight-through processing. So on the next slide, we're going to talk about the top priorities. You know, we asked these 191 companies what their top priorities were, and this is important for you to understand because you need to understand your organization. Where do we begin? What are the top priorities? You know, what is on the scorecard of my manager, of that director of finance, the VP of finance, the controller, the CFO, because you want to make them look good. And as you help them achieve their goals, they're going to pay more attention to AP. So that's why this slide is significant. You know, in 2017, the AP leaders continue to balance their traditional priorities with those that place them on the path ahead. As seen in the slide above us here, the most traditional of all priorities still strikes the modern day and accounts payable function hardest. Reducing invoice processing costs was identified as the top priority in nearly 2/3 of all AP teams. There is still a focus from the world of AP to maintain the core general principle, ensure invoices are not only captured and reconciled, but also effectively paid and processed. So AP costs, you need to reduce the cost. If, you know, one of the things we'll talk about later on is that it costs you more to process an invoice than the amount of the invoice, this needs to be rectified because that's not a long-term strategy for success. The data also shows that 51% of respondents are prioritizing between procure to pay and other automated systems. So the P2P cycle represents an opportunity for businesses to derive greater value from the tasks that help the company run at its most basic level. And our new research suggests that the AP function is now taking a much more active role in facilitating the links between the P2P process and automated systems. AP groups are not only boosting the strategic value of the phases underneath the model, they're also promoting full cycle of real-time intelligence and functional alignment that can most impact the overall enterprise. The AP industry as a whole is steadily pushing itself higher in the strategic hierarchy of the enterprise by capitalizing on its ability to impact and enhance cash management, supplier management, and real-time business. Once again, you have a lot of data in AP. Figure out how to use it to impact the business positively, how to help your manager and their managers hit their KPIs and their targets, and you'll rise with them. On to the next slide. So take a look at the best in class. You know, this is always one of my favorite areas of our research report here. It's understanding, you know, where the average is and what the best in class look like. Now, this is just meant to give you a measuring stick for where you are and where you possibly could go. If you're better or worse than this, don't say, hey, we're doing a great job or we're doing an horrible job. It's just meant as a benchmark. So you need to understand where you are and where you're going. So let's take a look at some of the characteristics and costs associated with this. So we define best-in-class performance in this report as the top 20% of the enterprises with the lowest average invoice processing costs and the shortest average invoice processing cycle times. Top-performing enterprises have taken their AP operations to the next level by leveraging technology to streamline the AP process, make it more efficient, and enable more strategic activities to be carried out. So this table highlights the high-performing organizations have significant performance advantages compared with the rest of the marketplace. I'm not going to go through this data with a fine-tooth comb here. I'll let you take a look at the slides afterwards. But you can see, on the top two areas here, the average cost to process an invoice is $15 for 80% of the respondents in the survey, whereas the top 20%, the best in class, do it for roughly 80% less expensive. So there's huge savings potential that can be reaped from this. Think about it. If you have 1,000 invoices a month that you're processing, and right now it's costing you $15, so what is that? $15,000 to process those invoices per month. Imagine the savings. You can do it for $3,000 a month. You're saving $12,000. These are real tangible benefits that you can show to your manager. They can show to theirs how AP is having strategic impact on the organization, helping the profitability overall. Well, also the second line item there is how long does it take to process an invoice. Once again, it's 12 days to 3.5 days. Why is this important? Because if you're taking longer to process an invoice, it could be that the invoice is getting paid late, or you're not able to take advantage of early payment options, the 2 net 10 that we all know about. So you're losing out on the opportunity to decide how best to use your money. So by improving the speed at which you approve an invoice, you then open up so many other areas within the organization for improvement. You can work with Treasury to say, hey, we now have a window of 10, 12, 15 extra days to decide how to pay this. So do you want to pay it sooner? Do you want to pay it later? That's when you start elevating the importance of AP throughout the organization. So some really good statistics here that I encourage you to take a look at and also start benchmarking your own. So now on the next slide, strategies for success. In the next 5-8 minutes, I'm not going to give you everything you need to do in order to be successful. I'm going to kind of highlight some of the areas that you should be looking at and talk to analysts like Ardent to talk to your organization about what you're doing and how you can position yourself for success. Talk to DUAP, Anna and company. They're experts in the AP automation field, specializing in Dynamics 365 and AX 2012. They understand that ecosystem as well as anybody out there. They understand the troubles and nuances. So when you start talking about how to be successful and things to look for, it makes sense to engage experts to help you do that after you've done your internal review. So take a look at the strategies for success. Whether by design or necessity, the responsibilities of the typical AB department in 2017 continue to expand and evolve, mirroring the broader convergence of processes and functions occurring in business today. As more responsibility converges under the AP operation, the function gains the opportunity to broaden its influence and make a larger impact. But these near-term opportunities and those that lie ahead cannot come at the expense of today. AP and other leaders of all stripes and maturities have immediate opportunities to improve operations within their own departments. As such, they have to balance the needs for agility, collaboration, and innovation with the discipline and focus required to extract more value from the function by stretching the limits of their organization and positioning it for ultimate success. So let's take a look at the essential elements for future success. An AP department's ability to drive process standardization and general efficiencies across the entire operation has been a defining characteristic of best-in-class performance for the past decade. But now the objectives of today's AP departments continue to grow and expand in scope and drive. Ardent Partners research indicates that there are several key factors that are essential for today's AP executives and professionals on this great new journey. Smarter enterprise systems. Smarter systems can offer new and innovative functionality, and minimum human thinking will be crucial for the future of AP. Deeper and more agile analytics. Today's AP functions require deeper analytic platforms that can dig deeper into the data. organizations that put the weight behind efforts to become more agile in this nature are the ones that will benefit the most down the line. You need to understand what's going on, and you need to be proactive rather than reactive. You want to get ahead of the curve. You want to know what invoices are coming in. You want to know what your outstanding liabilities are. You want to know what your opportunities are for achieving discounts. You want to know, who the biggest bottlenecks are within the organization. You want to understand who the key stakeholders are and what they're looking for and help them to be successful, because as they elevate, you'll elevate along with them. So next I would talk about innovation. Obviously, we live in a world that's constantly changing, and I know through personal experience, we now have, as of this holiday season throughout my house, we now have all these little devices that we can ask questions to. What time is it? Give me a recipe for this. Give me a recipe for that. So innovation is not only in the consumer world, it's also in the source-to-pay world as well. So some of the technology that we're looking at is artificial intelligence and robotics. Those are being brought into play within the AP realm. DoApp has a robotics offering that can help assist and take many of the manual processes out and help improve efficiency here. So that's something that is definitely worth taking a look at. Mobile applications for approving invoices. We all have mobile phones these days, so why not leverage them for work as well as play? So there's a great opportunity for approving invoices on the go, whether you're sitting in an elevator on your way to lunch, whether you're coming back from lunch, whether you're sitting at your desk, whether you're traveling. Mobile applications help us become much more productive and efficient. So we need to look at that, make sure whatever solutions we look at in the future contain these things. Blockchain technology, we're hearing a lot about it. It's in its early days, and most of you in AP are probably saying, this doesn't affect me, and you're probably right today. But you'd be wise to dig a little deeper into blockchain and understand about it and see, hey, how is this going to affect how we pay our suppliers and how we do business? Because when I do this webinar for you next year, we'll be talking about blockchain and how it's evolved and how it is impacting AP. So something else that's coming down the tracks there. The Agile reporting dashboards. I'm not sure if Anna's going to show some of DoApp's reporting capabilities today. I don't believe so, but they have some great reports that provide deep analysis into what's going on within the organization. And that's what you need to do. I talked about that before, but analytics are evolving, getting more powerful. It's something that we need to make sure that is part of our solution going forward. So now on to my last two slides here before I turn it over to Anna. Top 10 things not to do in AP. I thought, Anna and I were discussing this webinar, and we thought, we talk about everything that you should do. Well, kind of with, tongue-in-cheek, we talked about some of the things that you really shouldn't do and that aren't a sign of an efficient operation and something that you should look to move away from. So I'll quickly go through this list. The first one on the list, manually entering invoice data into ERP systems. In this day and age, there's so much technology out there to take that process away that you should definitely be looking at that. There's ways to automate the capture and receipt of invoices. So if you're not doing that, definitely start working towards eliminating the manual entering of data into the ERP system. You don't want your company to be, operations to be halted for non-payment of an invoice. The last thing you want is someone to come down to AP yelling, going, why are our cell phones not working? Why have they shut off our internet? That's something you don't want to happen with an AP. And you might laugh and say never, but I have plenty of stories where that's happened, and you don't want AP to be the person responsible for that. You need to have things in place to make sure that never, ever happens. You also don't want to become a call center for inbound calls. Why isn't my invoice getting paid? Where is the payment? How come this is taking so long? How come I only got paid this portion of it? You need to automate that process. And what you find is when you automate AP, a lot of these questions go away because people are getting paid. So guess what? They're not calling in anymore. And your staff that was answering the phone and responding to emails now has more time to do more proactive strategic type work. The next one is be involved with why your CFO is walking out in handcuffs. You don't want fraudulent activity within the organization. You don't want AP to be a conduit of that. I've seen numerous examples where AP doesn't have the right controls in place, and this becomes an issue. So you want to avoid that. I mentioned this before, spend more on an invoice to process it than the invoice cost. Definitely not something that you want to do. That's not a long-term strategy for success. You also don't want to have no understanding of your unrecorded liabilities. You need to know how much money you owe, what your liabilities are out there from all the invoices, from the goods you've purchased or services you've purchased. You want to have a grasp on that. If you don't, you're kind of running your business blindly there. You also don't want to be paying late fees or not taking advantage of early discounts unnecessarily. So if you're paying late fees, that's impacting the cost of operations, and if it's because you're not processing invoices quick enough, then you need to rectify that so that you get ahead of that. And rather than not taking advantage of these early payment discounts, you put yourself in a position to get ahead of the curve and decide, hey, how do we best use our money here? You also don't want to be manually shuffling paper invoices around for approval. That's not a long-term strategy for success. You also, number 9 is extremely important. You want to make sure that you are communicating with the other organizations, other departments in your organization there. AP is not an island. If it is, that's not a good thing. You want to make sure that you're talking to the purchasing department, the treasury department, the finance department. Now, some of you may be rolling your eyes and going, I just work in AP. I'm never going to do that. But you really should. Go to lunch with somebody, a purchasing manager. Understand a little bit more what they do. Understand how AP impacts IT. It's a good suggestion for success. If you understand what your constituents need, you can provide it better for them. So there may be a lot of answers to problems that you can help other departments with merely by talking to them. So at all levels, I encourage the collaboration throughout the organization. And then number 10 is that believing that electronic invoicing is a path to immediate paperless AP process. It's not. It's one step in the process. I have some people say, well, we get electronic invoices, and that's great. However, are those invoices that you're considering electronic, are they PDFs when you get them? Do you print them off and then, have to manually enter them, which we talked about before? So true invoicing is great, and it's a step in the direction, but you need to have an invoice automation solution to handle that invoice when it comes in. So let's move to the next slide, and I realize I'm probably taking up a little too much time here. So, I'm going to just kind of bring Anna back on in a second here, but for strategies for success, I've talked about this before. So rather than reading through all of these, make sure that you look through these slides, you understand your organization, take advantage of technological improvements, understand where you're at, promote the use of technology, whether it's on the payment side, the receipt of invoices, the processing an invoice, and also think of AP as more than just paying bills. Because if you think of it like that, the organization will think of it like that. Understand how to make your boss look good and their boss look good. And as you do that, you'll become more strategic and less tactical, and AP will rise in prominence throughout your organization. So with that, I'm going to turn it back over to Anna, and I'll come back on for the question and answers at the end. Anna?
Thank you, Bob. Good. So how to get going with your invoice automation? First, let me quickly define AP automation and what I mean about it. So if we start with the worst case scenario and assume that your process is mostly paper-based or even email PDF-based, a big part of the process is the invoice data capture. For what those options are, I will present in the first part of my presentation. But when we have that automated and all your invoices are in electronic format, you still have a lot of automation to do before your invoices are paid. You need to have an approval process, workflows, PO matching, coding. Those are the kind of the minimum requirements before you can say that the process is finished. And in the worst case, you are doing those tasks manually to each and every invoice from scratch every time they arrive. Bob just told us that the best-in-class companies handle all their invoices in 3 days, and as the average for others is almost 12 days. So in this picture, there is a lot of those kind of reasons why that happens. There is automation needs in all the steps of the process, and you should make sure you know your process, identify the bottlenecks that there is, and make sure you have an AP solution that covers all steps of the process without causing kind of extra hindrances to it. Because kind of remember, bad integration to your AX might actually do that. It causes errors. It causes hindrances. So in the picture, I have just the common examples of bottlenecks that there is in the process. If, for example, your reporting isn't automatically produced by your AP solution, you should add that extra work to your own calculations also. Good. Now, how to get started? I prepared these 7 things that you should either do or look at when getting your automation work started. Many of these tips and tricks don't care which solution you use. You can actually do automation by making changes to your process before fitting the actual AP solution to it. I'll focus on this to the invoice receiving process in technical and process sense, though there would be hours to talk about other areas also. Like Bob mentioned, the mobile is an kind of a factor of the future for AP to quickly handling your invoices. And for example, the reporting part is an important factor also. Good. To eliminate paper. First things first, if we start from the beginning of the invoice receivable process on how we get those invoices from the vendors, it is good to look at some sample prices from a couple of our customers in US. These prices represent just the calculated cost of getting the scanned image, invoice image or e-invoice image with validated data into the system. So there is 3 possibilities, and I'll explain quickly what they mean. So the e-invoice is an electronic invoice that has the data of the invoice embedded. It does not mean just a PDF from where you would have to capture the data again from an unstructured format. The Capture as a Service is a service where a third party does the scanning, capturing, and validation for you. From this service, you actually receive invoices that look like e-invoices, but a third party that is specializing to do this does the work for you. The third option is to do it yourself, either by using an OCR solution that does the capture or by manually keying it in. The benefits of the first 2 options is that you see the cost of the invoice data capture as a kind of a list price, and you limit the invisible in-house work to minimum. The bad part is that, well, you can't get e-invoices yet from all the companies, and the percentage of e-invoices is, I think, Bob, you said 46%, but I promise that it will increase. I think I remember that I have the 2015 figure that it was only 25% of invoices from all the invoices. But when it decreases, I think we need the finance and AP people to have to want it and to make it happen. Okay, for the paper invoices, we have the option to get that as a service or make it ourselves. If you have already invested to OCR software or scanners, you might now be stuck with the decision. And if not, please consider the costs carefully before investing to your own in-house scanning. And well, who knows, if you have a lot of invoices, that might actually be cost effective, but as long as you have done the calculations. And here is kind of in the bottom, I have the examples that you kind of need to calculate in the scanner prices and the wages of your accounts payable people when they are doing the actual invoice kind of picture scanning and the validation and all the manual part of the work. Your final method for invoice receiving is most likely a combination of these, of what I showed in the previous picture. At some point, you should make the effort of getting the invoices in, and your AP solution should support that automatically. You at the same time have to decide where your paper invoices go and who handles them. But remember, automation works best on invoices that are about one subject. So when you have, for example, a bundle of multiple purchase orders in one invoice, you might end up using money multiple times on processing that invoice. So with e-invoices or scanned as a service invoices, it's cheaper to send single subject invoices as the actual processing time of one invoice is cheaper. So PO matching works better with just one PO. It's more likely to get matched automatically. And coding to one cost center and sending the invoice to one approver is usually more efficient. The cycle time is faster. And picture that one $10,000 invoice with cash discounts being halted because of one part of the invoice is incorrect or one approver don't do their work. And no, handling short payments is again manual work for the AP, so it doesn't solve the problem. It usually doesn't even cover the cash discount gained for the manual work that has to be done. And as a final note, fraud attempts are also harder when there is a straight-through processing of invoices. So it is much easier to send a fraud invoice as a paper invoice than as an e-invoice. So manage your vendor table. Master data should always be in AX. Do not upkeep vendor tables in different places. You need to have automatic updates and real-time information in your system. So how many places you use your vendor tables, make sure that you update them only in one place and keep them real-time updated in the others. Cleaning your vendor table is easy when you do a version update or a new ERP project, but keeping your vendor table up to date is also as important. If you have duplicate vendors, it is much more likely to get duplicate invoice that AX cannot detect. So protect your vendor table with a process so that just a few people can make changes to it, or at least to the payment information. Again, there is fraud possibility there. And AX has a lot of fields that you can fill to the vendors, so make instructions of what fields you want to be filled and stick to it. Not too much, but some important fields that you can, for example, use on vendor recognition and getting the electronic invoices in. If there is default dimensions that you can already set for the vendors, use those, as those are also kind of automation when you get some of the coding information automatically. And finally, if you have been able to agree on longer payment terms or cash discounts, if we don't have that information in the vendor table, then who remembers that when the invoices come? So it is already in the vendor information. We can compare that information to the actual invoice and then notify the vendor if the cash discount is missing. Good. Streamline the invoice receiving process. So we already talked about the technical format of the invoices, but then about the actual receiving of the invoices and especially the paper invoices. So whether you're going to receive the invoices to your own location or to scanning partner's location, make sure you make it as easy as possible for the vendor to send invoices correctly to the correct address. So you can use now your just updated vendor table for this and inform your vendors by a letter how and where you want your invoices to be sent. Educate your buyers especially and put the invoice address in your web page and inform all your other employees also, the people who are actually kind of making the orders. And just don't spend time hunting down the invoices throughout your organization. So vendors do have an interest in sending the invoices correctly, as otherwise they wouldn't get paid. So don't be nice about this area. And with the same kind of information letter, inform also the necessary fields that you want to have on an invoice. Invoices don't really have a standard on what should be there, but there should be one. And this is a pain point as there is so much automation that could be done if the correct information just be there on the invoice. For example, if the payment information would be on every invoice, we could always use that as an automated validation method for vendor recognition and preventing fraud attempts. But in addition to the obvious, like the invoice total, you should ask for the PO number, coding information, and the name of the order, and so on. And the invoice number is in the list because of those utility companies that might not use the invoice number at all. And that is so unfortunate as that also raises the risk of having double invoices. But to kind of correct that, if you're not able to get the invoice number on the vendor format, make sure you have your own rules on how to create the invoice number always on the same format so that AX can validate the invoice number and it will not end up as a duplicate. Good. Access and archive the pictures automatically. So now moving on to what your software should do for the automation. We already have set process to what we get our so that we get our invoices nicely in an electronic format. And now it's important that nobody is actually missing the file cabinets of the paper invoices anymore. So to access the invoice pictures, the access has to be easy and through AX. Of course, you might protect the access with user rights, but in general, the invoice pictures and audit trail should be easily seen from AX. When you have the transaction in X, you want to cycle back to the original vendor invoice picture directly from that transaction. It is possible to also see the comments and approval, if it is possible to see also the comments and approval workflow easily, then that is, of course, always a benefit. Also, the archiving of the invoice picture should be automatically done by the solution, so you don't need to do that separately. And by archiving, I mean there might be different legislative needs that are different in states or in different countries if you have foreign subsidiaries, for example. But good software should cover the archiving needs automatically. And about kind of removing bottlenecks, I have to advertise a blog of my colleague and the DUAP CFO of Sanna. She just had this published, and I urge you to go and check that and read it through from the DUAP LinkedIn page. So she has a blog, Stop Wasting Money Doing Unnecessary Finance Management Tasks. And she talks about how most most of the development of financial management focuses on increasing the automation. And before doing that, you should stop and think and skim down all the unnecessary work. So this sentence is stolen from that blog because I just loved it. By doing a task at all, by not doing a task at all is free of charge. Good. So bottlenecks mean the manual work that you currently cannot avoid or slow part of the process that needs mending. Here are just kind of few examples of the most common ones, but you need to walk through your bottlenecks of the process. I think the approval process and coding parts are the ones that have most of the kind of unnecessary tasks. And for example, in the approval process, think how many people are actually kind of reviewing those and how many times the same invoices. Do you have rubber stampers? And again, another sentence I stole from a webinar of the Association of Certified Fraud Examiners that said that if you have 6 people to sign a PO, you might as well have 0 people signing it. A great way to say that when there is a shared responsibility, there might not actually be a responsibility at all. For the coding part, I think the kind of my favorite example is coding every person's in your company, every person's phone bill to the correct cost center and to to the correct account structure, is that really needed, or could you divide those with a kind of general percentages? Because doing that hours of coding manually based on an invoice, does that really need to be in your reporting? And if it's just there to raise cost awareness on how much those phone costs are, that is a really expensive way of showing that. You could actually do that in a different kind of reporting to make it to make the AP work more cheaper. And think about your account structure also. I think the worst case scenario is that I've seen 17 dimensions. It was an AX company who used to suffer from having the 3 dimensions only allowed in the earlier AX versions. And when they got their AX 2012, it was a field day, so they had 17 dimensions. What ended up is that nobody actually knows how to code those invoices anymore. There's too much dimensions, and that makes your reporting inaccurate in the end anyhow. Good. As my kind of a final slide, and basically also as a conclusion of what I said in the past slides, when choosing your AP solution, in addition to the normal features that all the softwares basically have, to achieve automation in all the areas of the process, look into these also. From these, I want to emphasize the e-invoice readiness and the integration to your AX D365. The interfaces should be real-time and consider that who is responsible when there is changes in D365, for example, and is it you or is it someone else? And with D365, there might be actually much more often updates that you're not aware when they come. So if the software isn't really designed to work with AX, with D365, you might end up fighting with the interfaces more than enjoying the automation of the AP solution. Your AP solution and AX needs to work together in sync. Good. I think it's time for our questions and answers.
Okay, thank you, Anna. Thank you, Bob. And yeah, so if you have a question, please do use the Q&A block to the right of the main presentation area, and we'll take any of those that have come in, and they continue to come in. So one question is asking about being up and running with DoApp. Is there a typical installation timeframe?
So typical installation timeframe is really short with DoApp because we are a software as a service solution, and we work especially with D365 so that we have our kind of standard package that will work with your AX, with your D365. So as long as that is in place, DoApp runs from the Azure cloud, and we are in sync with your AX. So we use the parameters and settings that you already have in place in AX as much as possible. So the amount of work that is left for just the AP AP software to be handled, it's not even that much. I think that kind of the biggest part of a installation of a project is that the change management that you need to have in your company, especially if you come from a purely paper-based process. Then to change that to a purely digital process, I think the biggest part is there.
Okay, the next question is, it's sort of a statement. We're dealing with a lot of paper invoices today. How do we get started with adopting a solution like DoApp?
Well, basically those 7 steps. So How to get started? I would kind of start from thinking on how you would set up to getting those invoices in. We can actually help you with that, as that I think is a big part of the process, and it's easily automated. But we have already kind of solutions ready-made for that. So with DoApp implementation, we would kind of first start on kind of deciding on how to get your invoices in, how to get them as possibly invoices or scanned as a service, as those are the kind of the cheapest options. But even if you're just kind of using AX and not going to actually invest on anything else, any kind of third-party solution for the AP, then you also kind of want to have the digital invoice process as easy as possible.
And Anna, to that point, I was going to say, we get asked that question quite a bit when we're talking to companies that are just getting started with the AP automation process. And there's no one right answer. It really depends upon the organization that you're working with. Typically you have the capture of the invoices, how do they get in, as you mentioned, then the automation of the invoices, the approval automation process, and the payment of the invoices. People often ask me this when pressed, which one should you handle first? I often say that you need to handle the invoice automation process first. And the reason why I give that answer is that if you were to handle the capture of the invoices fast, so now you're getting invoices much quicker, but the ability to process those invoices still was a labor-intensive, slow, lengthy process, and all you've done is sped up the bottleneck. So now you're receiving invoices faster, but you still can't process them. So the way typically I would approach it is go to the invoice automation component, make sure you have a way that once the invoice is received, that you have automated the approval processes, any PO matching that you can do to automate that so you're only handling exceptions. Work on that process first, and once you have that down, then start worrying about, okay, how are we going to receive these invoices? How do we improve that process? So it's something that I get asked quite a bit, and while there's no one definitive answer, it really depends upon the organization that we're talking to. When pressed, I'll say invoice automation is the place to begin.
All right, excellent. Let me just check here for any other questions. Okay, here's an interesting one. How is e-invoicing different in the U.S. versus other parts of the world?
E-invoicing in the U.S. is different because there isn't, for example, just few standards that you would know to use, and there is still the kind of lack of the interoperability framework. So most of the invoices that are exchanged are from company to company or in private clouds. So what we are hoping that will happen in the next couple of years is that the e-invoice service providers start talking together and get an interoperability framework when you as a customer can only receive one format and all the invoice providers will do the work for you, so you're able to get invoices from any vendor from anywhere in the U.S.
Yeah, just kind of adding to that, Anna, completely agree with you that Europe is much further advanced in the interoperability. Obviously, we can all send invoices electronically. It's the interoperability where the disparity lies. And as you said, in Europe, there's the ability to send an invoice from one provider and have it received in another provider seamlessly because there's an association there that's working on developing standards called, I believe it's EESPA, which is the European E-Invoicing Service Providers Association. So there's a group of, I think it's 30 or 40 larger invoicing providers that are grouping together to kind of figure out how do we develop standards to make sure that this happens much more easily and without much interruption there. And the other thing, too, is the difference is government mandates. In Europe, many governments have mandated the use of e-invoices for both government and commercial purposes, whereas in the U.S. this really hasn't taken hold yet. There's not as many regulations or guidelines for doing this. So in Europe, where sending an invoice and be able to receive an invoice electronically is mandated in many cases, that same thing doesn't hold true in North America.
Okay, well, we appear to be at the end of our list of questions. I will make a final call if anyone wants to get in another question at this point. We can still make time. But I will start wrapping up too. So we have recorded today's event, and we will be sharing more information on how to get access to that and other resources soon. We also have a very brief survey that pops up after you leave today. We'd appreciate any feedback there as well for us, for our speakers, and your experience today. So with that, I'm not seeing anything else, so we will start wrapping up. Anna, Bob, thank you both so much for speaking today.
Thank you.
Thanks, Jason. Thanks, Anna.
Right.
Great to be here.
And thanks for everyone joining.
All right, and we will end it there. Thanks, everyone, and have a great day.